Now, even if you didn't bank with SVB, a lot of us may be wondering what this collapse means for our wallets. So I asked San Jose State accounting and finance professor Matthew Faulkner. Here's what he had to say.
It's going to have us all take a look at how we bank. If you're one of the fortunate ones that has more than $250,000 in a singular bank account, you're going to consider, well, maybe I should open up a second bank account to put some of that money that's over the $250,000 FDIC limit. In terms of our general economy and the financial institutions, I think overall they're fairly sound. I think they're much better capitalized. The stress testing that gets done is stronger than it was in 2008.
I think when we hear terms like bailout, banks failing, many of us go back to 2008 and think, uh-oh, is this happening again? You don't think that's the case?
I don't think it's the case. I think obviously there's banks that fail occasionally, but I don't think we're in a place where that was a lot of lending to people who had no chance to pay it back. This one had to do with a combination of factors that some may have been out of control of the bank, but working with the startup industry, it slows down occasionally. And the slowdown caused drawdowns from deposits and sell-offs of asset losses from the bank, and then led to a bit of mania to get your money out.
You mentioned earlier that maybe this is a lesson to folks who have a significant amount of assets to diversify, maybe put it in different banks, different accounts. Can you go into that a little bit and how people should be looking at their money?
Right. The easiest way to think about it is for every person on your account is essentially represents a $250,000 safety net. Any number above that isn't protected if the bank stops operating and the government doesn't then also step in. So you can have as many accounts open as you want at different banks. If you are fortunate enough to have $1 million sitting around, you might as well have 4 bank accounts with $250,000 in each one. So yeah, I'd 100% recommend all of us to take a moment to look at our financial institutions and situations and just enjoy the benefits that are there, or take advantage of the benefits that are there, the protections that are there.